Alright guys, this is Jazz aka Trend Trader for you. So I'm going to do an analysis on SPY or E-mini futures, and obviously everybody knows that we're bearish, right? We've been dropping and dropping, but there's got to be a point where we're looking for somewhat of a reversal if that is coming. Okay, so what I'm going to do for that is step back times 4. Okay, you're looking at an hourly chart, which is somewhat of an intraday time frame. I'm gonna skip the daily chart, skip the weekly chart, and jump right into the monthly chart, right? Let's just say 15-year or whatever, right? So each year you're looking at from 2012, 13, 14, 15, and you're looking at each candlestick is a monthly candlestick, right? So in this month of whatever it is, if you see, look at right around here. So this month was February of 1st, 2014, so beginning of the February to the end of the February, right? So that's your monthly candle. You know, what I'm trying to get into is trying to find a roadmap, okay? Trying to see what are we doing, okay? Where is the whole market going, okay? And this is very, very important for people who are investing in 401ks, or you have your, you know, bi-weekly or weekly or monthly checks automatically being deducted for 5%, 6% going right into those funds, right? You want to be looking at those. This is very, very important that you want to be looking at those. And we've been talking about this. It's been months, okay? It's been months when we looked at a weekly chart when the SPY was giving us a bearish kind of signal, and we talked about it briefly, and we said, okay, this is where we're trend is breaking. Okay, I'm not going to talk about that. We're going to talk about more than a trend. We're going to talk about very simple concept, okay, and call it a support, call it a, you know, table with the 2 legs, or a stand with the 2 legs, 4 legs, whatever it is, doesn't matter, right? So what you're seeing in here is a monthly chart. Okay, monthly chart. I'm going to do something really simple. Again, this video is, you know, not just for advanced, but also for the beginners who are trying to understand where the market direction is. What are we doing, and are we trading downwards, upwards? Are we trading sideways? So how you can simply apply, you know, just simple tool and see, okay, this is what my roadmap is. If this breaks, I'm going long. If this breaks, I'm going short, or you're getting out of your older positions, whatever it is, okay? So I'm going to do something very simple, okay? I'm going to draw a simple box, okay? So that's your simple box. Why am I drawing this simple box is price went up. Let me get my tool in here, okay? Price came down, right? Price went up, price came down, price went up, right? So price traded in this somewhat of a rectangular or square, actually more like a rectangular kind of a session, up and down, till it broke up, right? So till it broke out of this consolidation area, and up until then, we didn't have a direction. Again, I'm looking at a monthly chart, okay? So this is to give you biggest time frame of a roadmap, not just, you know, hourly, not just daily, where we're talking about the monthly or even bigger time frame that is out. So you can kind of have an idea of, okay, what am I expecting from the market? What happens if this happens, or what happens if this happens, and what do I need to do to control my losses, or if I'm aggressive, even going short, right? So price traded in this kind of consolidation pattern, kind of like, you can say W, it doesn't really matter, right? It just went sideways for many months, and he broke out, then he started to do this, right? Went up and down and up and down. So this is what, let me just do another example, okay? Another example where it kind of makes sense. So how about this one, okay? Again, I'm just looking at, just like you guys are too. So this somewhat of a fashion in here, sideways. Price went up, right? Came down, went up, okay? Broke out of here, right? Came down a little bit, did a little false breakout to the upside, came back. That tells me there's a lot of bullish behavior. Again, I'm not going to go into detail, but eventually broke out, right? Retested where it broke out of. The again, simple concept, right? Relationship support and a resistance relationship, right? Boom, right? So what you're looking at is a consolidation area and how price breaks out of it and to what direction it leads, right? So obviously in this was an easy one to trade because trend was up, right? Trend was semi kind of up, even though we had a little downtrend. But once you start seeing a little bit of a indication of a reversal of a counter trend, which was a downside, the counter trend would be to upside. Now you're seeing reversal, higher highs, higher lows. You tend to see, okay, I'm from here on, I'm going to go up. Okay, what's happening in here? It's somewhat of a same thing, right? Somewhat of a same kind of a scenario. So let's draw the rectangular. Okay, sometimes these tools. So this is what we're strictly trading right now. That's it. Okay, there is nothing more, nothing less. And when you're talking about or watching all these charts and people talking about videos, okay, I'll predict a move here and then going down. Okay, you got to have a roadmap. Okay, I don't know. I mean, what if something happens tomorrow that causes the market to just skyrocket, right? Skyrocket to 1950, 2000, 2150. Where are all the analysis went? Down the ditch, right? So what you really need to do is have some of the roadmap. Okay, if this happens, what am I expecting, right? What am I expecting if price breaks out of here or price breaks out of the other direction? So what we're really seeing in here is same thing, right? We're seeing an up move, consolidation comes down into this somewhat of a rectangular box and goes up again, comes down in here, okay? Being the trend been up, okay? I'm gonna delete that. I'm gonna delete, just gonna zoom out a little bit. Being the trend being up, okay? You have to understand that trends keep on rising, okay? People are bearish, that's totally fine. But you wanna be looking at the biggest time frame because what you're doing is you're controlling your 401ks, you're controlling your mutual funds of whatever longest positions that you're holding. So you have to look in the biggest time frame, which is your monthly or even yearly at some point, right? So this is what we're in. Till it does something from here, either breaks out to the downside. In fact, there is a little bit of a, let me draw another little rectangle in here. I see a little bit of a bear trap in here, okay? So that right there, okay? This area, that's what I'm focusing on. Price comes down. If it breaks it, I really wanted to break this line, okay? Let me do another price level in here. So around that, okay? In fact, this is the price level, okay? This is the price level. Again, I'm not gonna go into detail of hey, what is support and what is resistance. And support is basically, just touch it up a little bit. It's almost like me standing on one leg. How long I can go on standing on my one leg. I need to put my second leg down to give it a support, right? If I don't have the support, I'm gonna fall to the ground, right? Same as that, your opposite of support is your ceiling, or opposite of support is your resistance, right? So how long can this support hold, right? Till I put my first leg down. So that was your first leg, okay? That was your first leg. Second leg was made by this candle. Then you had another third leg and a fourth leg, right? Support gets weaker every time it gets tested. That's why, give you a little hint. First test is the best test of the support. So that's why I'm saying, okay, this is a critical area. This is where price could literally break this, right? Break this box right around here, come down to 1750 to 88 area, roughly speaking, right? Then jump to the upside. So this is what I'm watching. But you need to have a roadmap. You need to have somewhat of a clear view of the bigger time frame. Okay, if this happens, obviously, if this breaks around 1752 in a reddish candle, and that's the point you want to, okay, now it's time to do something about it. The trend is obviously down to the right. You're seeing the trend changing the trend right now. So in a daily, in a weekly, you can be still trading to the short side, but at a point you need to see what you're doing. If the price were to come to a point where longs are setting up. Okay, again, we don't just simply say, okay, let's just take longs at 1752. You got to look at a little bit more. You have to have a skilled eye. You have to look at the little more technical analysis view of it, right? You got to look at the daily. You got to look at the volume. You got to look at a lot of other stuff. Then you can decide, okay, now that it's showing me a reversal, I'm ready to go long with the lowest risk possible. So this is just my analysis on it. Okay, is you trading in a box. Every time you see a price trading in a box, it's gonna break out one way or another, right? Okay, in this case it was broke to the upside. Let's see what in this case, where does it break down to this side, or maybe possibly go up and break up, right? A lot of bearish sentiment, there's no doubt about that. Companies are putting out earnings that are not definitely liked, and their consensus is falling short, and they are basically not showing any growth. Okay, if you're not showing any growth, obviously it's going to affect the market. What is that? ES or S&P 500 is Standard and Poor 500 companies. If those 500 companies or stocks or whatever it is, if they're not showing any growth, obviously the market is going to go to the downside. But this is I believe the right way to do technical analysis is pull out the biggest time frame of whatever you're looking at and see, okay, what is my trend? Okay, what is my trend? What's been happening in the past? Okay, in the past, was there some kind of a consolidation area, which side the price broke out to, or which side the price is more likely going to break out based on your past historical data? So based on the past historical data, if price was to right around here, I would say, okay, we're actually going to break out of here. But I'm not gonna say till it breaks out that I'm bearish in the monthly chart. Okay, weekly, daily, hourly, I'm totally bearish. You can keep on shorting it. It really doesn't matter. You can play UVXY. This is one of the volatile markets out there to play. But this is an area where I'm keeping my eye on and see if that breaks, and that's where you want to be. Okay, you can put in your extra indicators for such as the Fibonacci. I think 23.2 is meeting right around here. You can pull out your trend lines. You can pull out your channel, the increasing, decreasing volume, stochastic RSI. If you want to do that, that's fine. You can pull out a lot of other stuff, and obviously your historical data is the main indication of where the supply and demand is. Right now, all I see, we're seeing a lot of supply to the upside. So every time the prices tend to go up, they're about to meet more suppliers, right? Every time you meet more suppliers, it's gonna keep pushing the prices down. There is no demand anymore. People don't want to go long at this point, right? But until that happens, we will know. That's what makes a trader a smart trader over a trader that is just, okay, I'm just long because I think the prices are way too down and way too fast. Okay, that's not how the market works. It could just keep on going down and down. People been crushed. There is no doubt about that. So listen to your chat room moderators, owners, or whatever they're saying. Hopefully they're doing this kind of analysis, even though I'm just putting it out for free. But hopefully you're listening to them and they're guiding you in the right direction, right? Because you're paying them. If you're paying them, they better be doing this kind of analysis to tell you, hey, the market, this is what we're seeing, and this is what in the direction that we're trading in. So if we're trying to pull longs in daily and even weekly, right, or even intraday, maybe you can get somewhat of the correction kind of moves to the upside, the pullback moves to the upside. But if you really want to go along with the trade or along with the trend, you want to be looking at shorting them. Okay, let me just quickly look into, let's just say 30-minute, right? What you want to be looking into is, let me delete that. So what you want to be looking into, shorting the rallies to the upside, right? You can clearly see price goes up, meets resistance, comes down, meets resistance, comes down, meet resistance, there's the bear flag, meets resistance, comes down, right? A beautiful bear flag, meets resistance, comes down. Possibly could be inverse head and shoulder forming, right? An inverse head and shoulder, head, left, kind of like a left shoulder, right, possibly right shoulder, break out of this. You can have a trade on the inverse head and shoulder kind of a pattern. But just know what your whole roadmap is for the biggest time frame, for the biggest players, right, which are the mutual fund players. And so the lesson in here is control yourself. Don't just keep on handing them your money. Ask them, hey, what are we doing, right? I mean, is my investment is down about 15%. Don't you think we should maybe put the money into bonds or maybe into defensive kind of stocks? I don't know. There's so many out there. Again, this is just my opinion, not an advice, but just wanted to share all that with you guys, and hopefully, if there's something to learn from it. But this is an area where possibly we could see somewhat of a pullback to the upside, and then there's a lot of demand to the downside once that breaks, right? So it's not going to just complete on shooting it to the downside. It's always going to be rallies to the down, rallies to the up. For instance, you had a move to the downside, met the support, met the resistance, came down. See how beautiful move it had? So at that time, you can be bullish. There's no doubt about not being bullish. So I'm going to wrap it up to that. And just before I wrap it up, just want to show you something good, right? Got the solar, and just panels are producing just beautiful, right? 32 kilowatt hours for the last few days. It's California. Man, it was hot today, and I actually sat out there to do the water testing on my pool, and it was so hot. And I'm glad to got the solar. You know, my whole goal, again, this is also a learning kind of lesson to people who are, okay, I'm gonna start trading. Okay, I'm gonna start trading, but I have thousands of bills. I got a credit card to pay. I gotta do this. I gotta do that, and they overlook all that. They say, okay, let me just trade and make quick few $1,000s so I can pay it off. And by the time you know, people who don't have enough experience or enough skill, technical analysis, they end up losing. Now they have the credit card loan or student loan or whatever it is. Not just that, now they have more loans. So be a little wise about what you do. Again, just my opinion, not giving any advice or anything. This is what I do. I want to cut down my solar $500 bill from my electric $500 bill, which was back in August, September when we moved in. I want to try to cut it down as much as I can. I know that I'll still be paying it, but I'm trying to put my every attempt to cut it down. Okay, so start from the savings. You don't have to start making money in trading. You can do that by doing, I don't know, taking care of a lot of stuff in your own hands and not depending on anybody. Okay, that's it. That's all I want to say, and hopefully you guys are trading and not losing a whole lot. And if you are, maybe gotta do something. Okay, you gotta get some education. Get some education from somebody who knows what they're doing, and maybe they can guide you or steer you in the right direction. And again, always remember, the cash is the biggest position you could have. Don't need to make money. Okay, put it in maybe really high dividend kind of a play, bond or something, muni bond or whatever it is, right? That way at least you're getting somewhat of an interest out of it. But if not, just save it, put it on the side. When there's the right time, if you really want to be long, you can invest back in. If you want to go short, then you just need to have day trading and swing trading opportunity, which is multiple out there. All right guys, take care and talk to you guys later. Bye.